All right, good afternoon, everyone. Futures Barizio here, 5:30 p.m. on Thursday, August 21st. Hope everybody's having a good week. And just checking in here. I haven't traded much this week. I've been watching things. I'm in between trips here. I have another trip next week, so I've just been so busy lately. But anyways, I did want to just dive into a couple of things here, and we'll cover off on this. Should be fairly short. Um, now, what you see on the screen are a couple of indicators. So just going to talk about this. And again, as I've always said, you can use indicators. There is a place for them if you want. A lot of times I end up just using just naked charts, what they call naked charts, which is just the candles. Or whether they're regular candles or Heikin-Ashi candles, doesn't really matter. But some people do like to use indicators, and I do think they have a place, but you have to just keep context in mind that they are lagging, pretty much all of them. And some people say there are leading indicators, technical indicators you can put on your chart. I don't know if that's really true, because all indicators need previous price data to plot their however they show up, whether it's a moving average or an oscillator or anything else. They need price data in, and then however they're calculated is how they plot on your chart. So you have to keep that in mind. But at the end of the day, it's still, like I said, you can use them or not. But if you do, you still have to maintain market structure principles, which is kind of my guiding star in terms of where I see the market. It doesn't really matter what time frame you're using. Market structure is still important. It's just that if you're using shorter time frames, you should have an idea what the longer time frames are doing. And when I say a longer time frame, a good rule of thumb is that the longer time frame should be 4 to 6 times higher than the time frame that you're analyzing for entry. So if you're looking to trade on a 1-hour chart, you should be looking at a minimum of a 4-hour chart. So that would be a 4 to 6 hour chart. And, you can have a 6-hour chart on MetaTrader 5 or pretty much any platform other than MT4. You can look at a 6-hour. You can look at, on trading, you can create your own time frames. But anyways, if you're trading on a 15-minute chart, that would be, again, would be like a 1 hour, probably like a 1 to 2 hour chart, somewhere in there as your higher time frame. Okay. And of course you can use higher too. But so that's the rule of thumb that I've always used: 4 to 6 times higher than the time frame that you're looking to enter on. Okay. So with that in mind, we're going to look at just a couple of markets. You can see part of down in the lower left corner of my screen. I also mentioned recently that I'm going to be trying to cut back on the number of instruments that I watch, even if it means less trades. It's just, again, like I said, I am so busy, and I really don't like analyzing 20 different charts. So for now, I've actually cut my futures market down to just 2 markets, and we'll cover both of those here. And we'll take a quick look at 2 Forex, and then that's pretty much it. Now, this might change over time, because if one of these markets goes into some sort of deep consolidation and doesn't look like I'm going to be getting any trades for a while, I may put it aside and bring up something else. But right now, both of these have opportunities, so this is what I'm going with. All right, so on the chart, we have 2 indicators. The moving average, you see there, the dotted green line, is just the 20-period simple moving average. All right, and I know you can't see my time frame. This is a 30-minute chart. And I found that this time frame is a good time frame for using both of these indicators, at least on these 2 assets. You may have to adjust it on other assets, but in here, in my back testing, this seems to work. So if you're going to try this, I would start with this time frame, the 30-minute, maybe the 1 hour, and then adjust it accordingly. Remember, especially for like the MACD at the bottom there, the higher you go up in time frame, the more slow your signals are going to be and potential late entries. But on the other hand, if you go down too short, you're going to get lots and lots of whipsaw entries. And so I found the 30-minute is a good in between. And I'm just using default settings on the MACD. So again, this moving average is just a simple 20 period, a 20 period simple, right? Nothing fancy. The MACD, this is a custom indicator, but it's really only custom because it has nice, pretty colors. Because the default MACD indicator on trading on MetaTrader is crap. It just looks like hell. They don't, it doesn't have the two lines, although I'm only using the histogram here. So there are custom indicators for MetaTrader you can get. This is one of the two that I have, and I do like this one. It kind of mimics the TradingView version. And I turned off the signal line. So let me just bring it up. These are the standard settings for any MACD, 12.26.9. I have not touched those. Applied to the close. All right, so I left everything default. The signal line and the MACD line are the other two lines you can have. So if I turn these both to true, I don't know why they're not showing. Oh, you know what? Hold on a second. I think I only have it set for certain time frames. No. Well, that's weird. There's a defect in the indicator. Well, it doesn't matter because I'm not using it. Let me put another version of it on here. I don't know why that's a defect in the indicator. I just realized that, but it doesn't matter because I'm not, like I said, I'm only using the histogram. But if you wanted to use the actual line MACD lines, you just have to have that feature active. And let me find it here. Okay, here it is. So I will leave these on true. And then you can see this is what it looks like by default. And all as this line shows is where the crossover on the histogram happens. So if you take this area, let me just blow this one up. No, I can't because it's, oh, there we go. See where it crosses over, where the blue line crosses through the red? Well, that's this, where this red, where the histogram flips from green to red. So it's showing you the same thing. It's just here it's showing you visually as two lines, and here it's showing you on a zero line cross. This is a zero line right through the middle between the green and the red. So all this is showing from the histogram flipping from green to red through the zero line. All right, that's all that means. So if you like having both of them or one or the other, you could turn off the histogram and only have the MACD line and the signal line too. That's perfectly fine too. But for the sake of this, just to clean it up, I just have the histogram showing. So let me delete that one, bring this one back up. Okay. And again, this is the exact same thing, just minus those two lines. All right. And again, just default settings. So ideally here, so let's talk about, this is cattle, 30-minute chart. I've been talking about this market for weeks now, saying that it is at like 4-year highs, and it still is. It did make a new high yesterday after quite a bit of consolidation for a few days. It did make this new high right here yesterday, and then it kind of came up here, and you can see the sellers, kind of after several attempts to go higher, sellers kind of took over once it made this high and pulled it back again. And then this was today where it came right back to the moving average, and it tried to go up. This was the opening candle at 9:30, and you can see it failed to make a new high, and then we just moved sideways the rest of the day. Now, and like I said, I'm not trying to pick tops on this thing, but whenever I start seeing new highs fail after a trading day, that is a little bit of a caution, because this thing has just been on such a tear. For it to not make a new high, suggests some potential weakness. However, I do want to note that, we had this situation right here. Here was, this was back on the 11th of August, so about 10 days ago. You can see price went up here, failed to make a new high versus this high. It did pull back. And, it broke under here. So even though it didn't make a new high, it did maintain market structure. And then eventually it did go up. So even though at this point right here, it failed to make a new high, it still ultimately did. Now, it took a couple more trading days. So even the next day, it failed to make a new high again right in here. Pulled back, went sideways again. This was like late last week, or actually earlier this week. and then we went sideways for a couple of sessions, and then boom, it finally popped higher yesterday. But again, back to today, it failed to make another high again, a new high today. So again, I'm not trying to pick tops here. I'm certainly not telling you to sell this market. But I do think that the bulls, compared to if you look back where this thing has come from, it's been pretty good at making new highs. And now we've had several sessions here. 1, 2, 3 out of the last 4 sessions, basically, where this market has failed to go higher. Okay? Failed to put in a new high. And so what does that mean? I don't know. I mean, does that mean it's going to roll over and start selling off? I don't know. But I would be a little cautious. So I've been very hesitant to take long positions, even though, we start off seemingly every session with a strong bullish candle. But that bullish candle is not equating to anything. So now we're back to the moving average again after the end of today's price action. So let's see tomorrow. But like I said, even though, yes, the indicator is, this indicator is suggesting good places to enter every time it comes back to this 20. A better place is when it breaks below, like it did here, like it did here, like it did over here, but it doesn't break the previous market structure. And these are the best and the lowest risk entries, in my opinion. And we'll just look at this one right here. So we had this high put in, price came all the way back down here. Okay. So now, actually, you know what? Let's take this one, because this one made a new high. So we had price come up here, makes a new high, pulls all the way back. All right. And so where's our previous market structure on this? Well, it's pretty tough, but it's probably back here somewhere. All right. And so when price comes down here below the moving average, this is a great place to look for an entry, because it's below the moving average, but we have not broken previous structure. You can see it tapped into this area here. The last time it really had any real incursion below the moving average was in here. So that's why I said this is probably the structure area on this time frame. And you can see price came down and touched it, never breached it, and then boom. Now this one would have maybe been tough, because maybe you went long right here. As soon as it breaks back above the moving average, this looks pretty bullish. And then the next day it slams down again. And people have their stop losses sitting right underneath here. This candle comes down, wicks them out, and then the market takes off. Classic liquidity sweep. Okay. So how do you avoid that? Well, you put your stop loss underneath the previous swing structure, which was back here. If you had put your stop back here underneath this, at this red line, you would have been close, but you wouldn't have been hit. And in futures, one good thing you don't have to worry about, like you do sometimes Forex, or like gigantic spreads coming down here, even though the candle never actually showed. This could easily wick you out on a Forex pair because of just widening spreads, but you don't really get that in futures, which is one nice thing about futures. So if you had your stop down here, you probably would have been fine on this pullback. You would have gone through a little drawdown, if you got in like over here, let's say, this candle, and you're like, oh, I want to jump in, even though it closed, right in the middle. But let's say you just had a little FOMO, you jumped in up here, you had your stop sitting down here. That is a pretty big stop loss on this asset. I mean, it's a 30-minute chart. On some assets, that wouldn't be bad at all. But on here, it's a little dicey. But then again, you probably shouldn't be trading this if you can't afford that kind of drawdown anyways. So just because of the margin requirement. But anyways, and then we had another pullback here. Now, granted, this didn't make a new high, but you didn't know that at the time. So here we go. We run up here, we make a new high, and the price comes all the way back down again, closes under the moving average. But where is our structure now? Well, now our structure is basically right here. If you want to put the candle bodies right here, whatever, here's your new structure. Price comes all the way down, doesn't breach this, and then starts to turn and go back up. Now, where do you get in? Well, that depends. I mean, you could wait till price breaks the moving average, but that might be kind of a late entry. You see, you leave a lot on the table. Or you could go to a shorter time frame, and you could look for a switch in market structure, like maybe on like a 15-minute chart. So let's just do that really quick. So here's that price action on the 15. And right about here, you see we put in this higher low. Now, if you're looking for a long entry, this is a great place to think about it. Price comes up, tries to come lower again, fails, and then starts moving up. 3 consecutive bullish candles. This would be, anywhere in here would be a good entry. Put your stop underneath here in case it comes down again a little bit more, and then boom. Now, if you wanted to wait for market structure to be broken, you would definitely have a late entry because the last market structure is actually right here. Basically, it was this bearish candle came down, made this low. So you'd have to wait, and you wouldn't be getting in until up here. You'd literally be leaving half that move on the table. So that is the advantage of the shorter time frame. Now you could actually refine that down to a 5-minute if you want. Here it is on the 5-minute. Again, price comes down. Here was that swing high that led to this low. And then you can see we come up. We start to come down again, right? Higher, you know, this is just, at the time, this would just look like a pullback. And it's going to go down again because we never took out this structure. But again, as soon as this higher low is put in and price starts to rally back and it fails to come down, take a new low, this is actually a great place to enter. All right. Now let's just go back to the 30-minute and say, okay, well, where's another place you could enter without going to a shorter time frame? Well, now we're going to go down and look at the MACD. So you can see on the pullback, the histogram was red, obviously, right? It flips down to the downside below the 0 line. We have all these red and pink bars. And the deep red means it's like super bullish, bearish. And the lighter pink bars mean it's still bearish, but it's not as strong. To me, it doesn't matter. It's still bearish. It's below the 0 line. I don't really worry too much about the color change. All right, you can make these all red for all I care. And all of these, whatever shade of green or whatever color you want. All right, but if we grab the crosshair tool and we look, at this point right here, we flip back to the green, to the bullish side. Well, where does that line up on this 30-minute chart? It lines up right here, okay? Which is a really good entry, right? It's still better than waiting for this swing to be broken, which we talked about a minute ago. And this is a good place to enter. The histogram flips back to the long side. You're looking for longs anyways. That's this candle right here. And you can put your stop below this swing or down here, whatever, and just let it go, and you would have been in the money here. And then we go on here. Now, even though this didn't make a new high, let's say, okay, you're still feeling pretty good about this market. So the next couple of days goes by, price retraces back below the 0, the line again. Where is our market structure now? Well, even though we didn't make a new high, just to be conservative, I would probably still change my swing to this low right here. So now this is our structure area. Price comes back down below, and you can see the histogram turns red right about here. Okay, so we're not going to go long here because the histogram's turned red. It's now below the 0 line after a big bearish candle down. Definitely not a place you want to think about entering. And then we go along, pull back, boom, right here. On this candle right here, the histogram flips back green again. And we're still below the 20-period moving average. So there's your possible entry right there. You go long on the close of that candle. We do have a tiny little green histogram. It is green, though, right here. Put your stop below this swing or down here if you want to be really aggressive. But even right here would be fine. But either here or here, it's not a big difference. This would, if you put it down here, would allow this thing to maybe go down a little bit more. But to me, just looking at how close it is to this structure low, if this, did go low, it's probably going to break through. So I'd be comfortable putting it below here. And you can see you would have had no drawdown on this. You would have gone in on the close of this candle and you would have gone right up. Okay. Now, if you move along here, you can see here we had price come back to the moving average, but the histogram did turn red in here. We didn't get that nice big pullback below the 20. So these are the ideal ones, lowest risk entry, because it's got a nice deep pullback. It's got a really good risk to reward to the upside. But you could also just trade it right off the 20, because here we did get the moving average to hold price. And if you look down here, we had the histogram turn green right here. Now they're tiny, but the first one usually is going to be small. And then it pulled back again. The histogram turned red again for a couple of candles. May have scared you a little bit. But whatever. This would have been your entry. And then if worse came to worse, after these red one, we had this one here. Now, the unfortunate thing was when you get these giant bull candles like this one, in this market, this is a really big candle, is that you get the green here you on this time frame, and look what happens. You get in here at the close of this candle. It does go up. I'm not saying you wouldn't have made money on this day, but I mean, you left more than half the move on the table. So ideally, the time to get in would have been right here, but I understand this one's not perfect because it's wedged in between two red areas on the histogram, but it still was a valid signal. And then we're into today. Okay, so today was right here. But look at the MACD histogram here. Even though we tried to go up today, right here on this candle, this was the opening candle right here. The MACD stayed red the whole time. There was no bullish signal here. And this was good because this was not a good trade. If you had gone in at the close of this candle, you would have ended this day, in drawdown or a loss if you closed the trade. Because this candle did go up. That was the high of the day. Every other candle after that, although it did try to go higher, failed to get even back to where this candle was. So if you had waited for the close of this candle, you would have been at best maybe break even on the day after sitting through all of this. Okay. So what do? Well, if you still feel the market's bullish, you can wait until you get the histogram to flip green again, and maintain your market structure. Okay, so where is market structure right now? Well, if you want to be conservative about it, your current market structure is right here. Again, it did not make a new high today. But still, price came down, tapped this area. Any break below here, to me, if you just follow the way this thing runs price, this is probably structured. But if you wanted to be more aggressive, you could say it's right. It's probably down here. The structure level is probably down here. So because this could come down, you could kind of get what you had right here, right? Move down, try to go up, and then bust through the moving average. Okay, so you could just wait now for this to kind of come down. Hopefully it'll make another leg down, and then somewhere down in here, assuming this area holds, you wait for a green bar to appear on the MACD, and then you could try to go long again. Okay, if you want to be more aggressive, if from where it's currently at, all of a sudden you see the MACD flip green again. From this level, you could go long right there too, and hope that it just breaks and at least get a little movement. But if it doesn't make a new high, it's going to be a very short-lived trade because look how close it is to this previous high. So if this ends up being just junk, then it's going to try to go up. You're going to go long, and it's going to fail, and you're going to end up with a loss. But if you did get a green histogram somewhere along this moving average, I would put my stop loss right here. I don't want to take the risk that this thing's going to go way down. Even if it eventually turns around, I would just get out basically at this point. So like I said, you can either, wait and see if this area holds. And if you get a green histogram bar in here, go long. Just understand this one is not as good and has the potential to be a short-lived trade. Or you could move this down here, hope that price gets down lower, and then look for long, with the possibility that you miss the trade. If this thing, from here blasts higher, makes a new high, then you miss the trade. I mean, that's just the way it goes. But I'm just showing you how you can use the moving average and the MACD histogram in conjunction with each other, and that's how you can do it. Okay, so the ideal entry is to get a nice big fat pullback underneath the moving average. But as long as market structure, the previous structure level holds, then these are valid pullback areas. And then you can either go to a shorter time frame, 15-minute, 5-minute. and look for that shift in market structure back in the direction of the trend. Or if you don't want to do that and you just want to rely on the indicator, you can use something like the MACD and wait for it to turn green again. Just understanding that it is an indicator. It could give you a false signal, and it could also give you a late entry too. But in this case, at least on this time frame, it's a pretty good entry. You know, as we looked at back here, this would have given you almost as good of an entry as if you had just gone to a shorter time frame. So that's why I like this 30-minute chart. All right. Now, this thing is making good patterns right now because it's in a nice trend. At some point, again, this trend will kind of fizzle out, probably go into some kind of consolidation pattern, and then maybe we roll over and go down. But for now, as long as we're holding these structure levels, it's pretty good. And if we go to the 4-hour chart, just looking at structure levels here, you can see the 20-period moving average is also giving us nice structure levels here. So the overall 4-hour structure is basically, to me, is like right here. So price can come all the way down here. If it takes out this area, and you can see this is a pretty important area right in here. We come down here, we break through here, that probably would signal the end of the uptrend. But as long as this area holds, then I think we're good. So, I mean, you could use, you know, maybe a one colored horizontal line or rectangle if you wanted to draw a zone instead of just a single line, you know, to mark out your 4-hour time frame. And then you can use, you know, a different colored line to mark out your minor structure on your entry time frame like this. Okay. So, but that's it. You know, basically you can use one time frame to do this. You can use, or you can use two. You can use the 30-minute and use the 5 or the 15 for fine tuning. I guess technically you can say 3 time frames because you want to look at the higher time frame like the 4-hour, but that's only just to get your structure level, just to make sure that you're aware of where your higher structure level is. That shouldn't be a very long visit. It should be pretty plain to see where the structure actually is sitting. Okay. So, you know, quick look at the 4-hour. Where's your structure? Down here. Good. Done. Down to the 30. Now you're looking. So here's that 4-hour structure. But our 30-minute structure, you know, is sitting basically, you know, in here. Okay. You know, or this one. Okay. Somewhere in here. Because we could see price break down through here. So actually, yeah, I'm going to go with this one. Because we could see, like we saw, like I said, right here. Price came down, consolidated, boom, made a new low, then went up. Same thing could happen here. I went down, consolidates, and then maybe makes another run down. I don't know. So that's where I would put this one. All right. So that's using this indicator along with using a moving average to find good low risk entry areas. But again, the market structure is always the king, and be aware of, you know, what that higher time frame is telling you as well. All right. So then the other market we're just going to look at quick here is this is Euro USD futures. So this would apply to Euro FX futures, like just the Euro. This would apply to Euro USD futures. And it's pretty much the same picture on the Euro USD Forex pair too. So it's pretty much the same analysis. Here is the Euro USD Forex pair. And we just zoom out and you just, you know, click back and forth between these two, right? Here's the futures, here's the Forex, here's the futures, here's the Forex, all right? You really can't see any difference. The price action is almost identical. The prices themselves over here on the right might be a little off because one's futures versus spot, but it's essentially the same thing. All right, and you can kind of do the same thing here. Okay, so what do we have? We have a downtrend going here. Even if we just take it from this point here, well, we had this big move down here, okay, on the 30-minute. Price goes, so even if you didn't take this one, then price goes up, but, you know, you have a structure break. So now you're waiting for a retrace. Price rolls, or you can see it holds the moving average all the way up, and then it breaks. We have a structure level here. I don't have the MACD on here because I have to move this indicator over to this chart. I got to copy it over. I should have done that. But I would bet you to say that we would get the MACD Actually, you know what? I think I have another version of it here. Let me just do that. I have one in here. It's called MACD 2-line. It's pretty much the same thing. 12.26.9, blah, blah, blah. Okay. So this one, I don't have the histogram, but this one has just the 2 lines. But remember what I said. Where these lines cross is basically where the histogram changes color. So on this correction back up, where does it flip? It flips right in here. So it's not even below the 20 period moving average yet, and you get your sell signal in here. Now, maybe you're not comfortable with that, but then, you know, it comes back up, retest this high, and then boom, we break through here. So anywhere from this point on is a good trade. And then you can see what happens again. Price rallies back through. We get another signal to go short here. Price comes down, rallies back through. You can see the MACD tracing up the correction. And then boom, we get another signal here on this candle, and you go short again. And then it happened again right here. And this one, you had a little teeny tiny false signal right here where price hit the moving average, and it did go down. I mean, it went down for an hour, and then it shot up again. I mean, you could have, this still could have been a valid signal. You just would have had to go out through, you know, some drawdown. Like if you took this signal right here, see this right here? It technically crosses right here. I'm just showing you this is real life. And that's right here. Let's say you went short at the close of this candle, like, oh, it's not going to really rally much. It's going to sell off from here. You probably would have had your stop sitting up here. That's where I would have put it. And price did come back, but it was well short of this. And so yes, you would have had to have gone through a little drawdown, but then boom, it fell, and then you got the new low. If you didn't take that one, then of course the bigger signal happened like right here. Okay, and this also breaks through the moving average on this candle right here. All right, so that's using it on Forex, on the spot futures, on the spot account. Spot Forex, excuse me, not spot futures. Those are two different things. Spot Forex. Okay, so just showing you can use it. And again, I'm on the 30-minute chart of EURUSD. These are futures. So, all right, and then if you look at the spot Forex, it's pretty much the exact same picture. I don't have the MACD on here, but you can see I've got the 20 period. It's a different color on here. I probably should change that because it blends in too much with the bear candles. But whatever, you get the point. We'll just change this to like some kind of green. There we go. All right, now I have a Fibonacci. I was looking at this earlier. So if this downtrend is going to hold, I expect to see now a move back above the moving average. And I put a Fibonacci on these last two big pullbacks, and they all came in between the 61 and the 78 retracement. So if this is going to do it again, probably a pretty good chance that it's going to pull back to somewhere around the 61.8 retracement. And if price does that, then I would potentially be looking for a short. Remember, market structure is always the most important. So where's my market structure on this time frame? Well, it's right here, okay, at this 100% area, because this is the swing high that led to this new low. All right, so as long as we stay below this level, even if it goes higher than the 61, that's fine. And if we go to the 4-hour, where's our structure level here? Well, on the 4-hour, it's pretty much the same thing. Actually, let's take this Fibonacci off because it makes the chart too crowded on the higher time frame. And we'll get rid of this arrow too. Go back to the 4. You can zoom in here to this area. And you know, there's that's the same structure. So in this case, the 4-hour and the 30-minute structure to me is the same. If you wanted to be a little more conservative, you could say this swing high above here. But either way, it's pretty close. That is your structure levels. Okay. So we are looking for down pricing. And I do think that this has potential as long as it can get through these lows down here. Right. It's going to run into some support back here. You can clearly see that. I think that this will go lower, and we probably will have, you know, run towards the liquidity pool down near these lows. And again, I don't have the MACD on here, but we can throw the 2-line MACD. I know I have that on here. I don't have that pretty one loaded into this platform yet. But this 2-line MACD is exactly the same. It's just from a different author, and it's not as pretty, but it's going to tell you the same thing. I thought I had it in here. Maybe I don't. Oh, that's a shame, because I would like to put that on and see. Well, we could put the regular MACD on there, but it's not very good. The one that comes with MetaTrader is really not very good, but let's put it on there anyways. And there it is. And basically, you're looking, the crossovers here are where the histogram basically falls through the indicator. Okay, so on this 30-minute chart, you can see we're below here. So we'd want all this to flip back over the zero line. Okay, and then you can see there was an entry right here and right here. So, you know, it works pretty good on here too. And then back here at this one, the entry was again right here where the histogram falls below the red line. A little bit late, but it gets you in right here. You still get all this. All right, so this is the MACD that comes with MetaTrader. You can see I don't like it one bit. But it is the same settings, and theoretically it does work exactly the same. So I will have to move that custom indicator over. This is my Forex. This is actually a demo account. I only use this for analysis of Forex pairs because I do like MetaTrader. And so I use this, and then if I'm going to take a trade on Forex spot, I have a funded Forex account that I use. But this is just a demo account I just use for analysis. So for as long as the broker lets me have it. So, which I don't think they have any time limit. So I'm sure I can keep it as long as I want. I think they tried to call me a couple of times and say, hey, you're going to fund an account, but I just don't answer them. So anyways, I'm just kind of a sucker for MetaTrader. It's basic. I don't need all the fancy stuff that TradingView has. TradingView definitely has its advantages, believe me, but for some of the other features. But if you're just looking at just simple price action analysis and basic indicators, if any, MetaTrader is perfectly fine. So anyways, yeah. So again, you can see the analysis on 4 markets: Eurodollar futures, Eurodollar spot, and also cattle and oh yeah, I already said Euro futures. So that's 3. If you wanted to throw a 4th one on there, this is the US dollar yen. You can see we're kind of in an uptrend now. You can see, we are basically making higher lows and higher lows, higher highs, higher low, higher high, higher high, higher high. So that would go in line with the euro dollar going down, the dollar yen to go up. So again, back to the 30. You can see with this one, we're getting the 20 period holding really nicely here. So again, depending how aggressive you want to be, take signals off the 20. Like this one would have been great. Or you can wait and see if we get some kind of move below the 20 and then use the MACD, get below here and then wait for a signal up. Where's our structure level? Well, clearly on this time frame, it's right here. So as long as we hold this structure level, any pullback in here is just a retracement. Okay. I don't know, from a fib standpoint where it'll go, but here's the 61.8. So anywhere basically, below the 50 would be good. 50, 61.8. I mean, you can get all the way down here. It probably wouldn't. But, anywhere in here for a pullback would be ideal. Now, again, because if that's what you're waiting for, as I stated, then you would have missed this trade, which was a great trade. So it just depends on, your comfort level, because obviously in hindsight, you're like, oh, well, you missed a trade here. But at the time, you didn't know this whole thing, this thing could have just like come down here, consolidated, and then boom, bust through here and come down and retest the former low down here and then go. In hindsight, you're like, oh, you dumbass, you missed the trade. But you don't know that. So at the time, you either have to just bite the bullet, and if the MACD or something gave you a signal, or you just like the way this looked, fine, you take the long and you just take your shot. In this case, you would have been rewarded. So you have to weigh what you're willing to the signals you're willing to wait for, you know, whether you want to take every signal or you're going to be very focused and just wait for a particular setup. And if that means you miss another one somewhere, then that's just the breaks, you know. And I think it kind of depends how many markets you're trading and, you know, how much you want to be in the market, you know. So, but anyways, that's the thing with this. I would be waiting, especially after a big run up like this. I would love to see a deep pullback here on this market. I will keep an eye on it because I don't trade a lot of Forex. I don't care if I miss a trade or two. So if this uptrend is going to continue, I am going to wait for a pullback below this 20. I'll throw that MACD indicator on here and I'll just wait, and I'll buy my time and wait for a signal on this time frame. So, all right. So that's it, guys. I'm going to leave it there. I hope that was helpful. Again, 20 period moving average, simple moving average, and a regular MACD. You can use the one in whatever platform. Every platform is going to have the MACD. I would leave the settings as is, 12.26.9 at the close. And, you know, you can play around with colors and the way it displays, whatever. Yeah, that's it. Just another trend following thing. And if you want to use indicators, these are two real basic ones you can use. Nothing fancy. But as you can see, they do work. You just have to be patient, wait for the setups, and understand it's still not going to work every time. It still may have a 50% failure rate. It's all about risk control. But don't rely just on the indicator signals. I've said it a million times. Use your market structure levels. That should be the first thing you mark out before you do anything else. Mark out your higher time frame structure level and your lower time and your entry time frame structure. And if you can't easily identify that within like 30 seconds or less, probably less, 10 seconds, probably not an asset you want to trade because it probably means it's consolidating. All right, and you want to stay away from those kind of markets anyways. All right, but the moving average will help you visualize that. So, all right, guys, so I'm going to leave it there. Questions, comments, leave them down below. Make sure you smash that like button, subscribe to the channel, and that's it. I said this was going to be a short video. We're at 42 minutes, so much for that. All right, so I'll be back tomorrow. I'll make a video if anything really comes about tomorrow. It's Friday in the summer, so I don't know if there'll be any trades, but if there's anything worth reporting, I will jump in tomorrow. All right, talk to you soon. Have a great night.